Good afternoon. This is Matt Reeves here with Financial Life Planners, your senior insurance specialist and investment advisor representative. Today is Monday, July 25th, and I have the privilege of bringing you the weekly market update. So, we've seen a lot in terms of high inflation, market volatility, even some economic uncertainty, but one of the bright spots we wanted to bring to you today was actually the strength of the US dollar. The US dollar index itself is actually up pretty significantly over the last year and reaching levels it hasn't seen in almost 20 years. A few main reasons for that. I would think number one is that the Federal Reserve raising interest rates at a pretty aggressive pace has created an investment opportunity for foreign investors to actually see a little bit higher yield on safer money. Uh, Reason number two would be that the US dollar is still the world's global reserve currency. So that safety and predictability that the dollar provides is very attractive right now for other economies seeing a little bit more uncertainty than maybe the US would. It's because the US right now is still seen as maybe the most attractive house on a rundown block, if you will. Doesn't mean we are immune to recession. We've seen things in other global economies like Europe with the Ukraine war, in Asia with China having a few more COVID lockdowns as of late. But it doesn't mean we are immune to that. So some of the other statistics we're taking a look at in terms of the recession front do indicate that maybe there is an enhanced chance of a recession by the end of this year. But what does a strong dollar mean to the chances of that recession? Well, a strong dollar really comes with pluses and minuses for our economy. A stronger dollar really does aid on the inflation front. It does help to reduce import price inflation. So it makes it a little bit more difficult for US manufacturers to raise prices amid some stiffer competition from other global markets. But it can also raise prices for US exporters. So really, it does create stiffer headwinds for revenues and profits of US multinationals because they need to translate those overseas sales back into the stronger dollar. So really simply put, if you think of it this way, if you're a US based citizen and you're traveling abroad, well, taking that dollar to other countries gives you a little bit more bang for your buck. Well, the opposite can be said for a foreign traveler to the US with their own currency. Their money is not going as far when the dollar is strong. So if you have any questions on how this pertains to your financial plan or your portfolio's performance, please reach out to us here at Financial Life Planners. Again, I'm Matt Reeves, your senior insurance specialist and investment advisor representative. I can be reached at 480-477-8530. Talk to you soon. Have a great week.